The next global financial crisis could come from either US or surprisingly Japan. Yes, Japan. And a big part of today's market volatility is linked to Japan's economy. Let me explain. For the past 20-25 years, Japan offered money at 0% interest. So governments and global institutions borrowed heavily and invested in the US treasuries, global bonds, equities and even crypto. But this model breaks when the interest rate rises, and that's happening now. Japan's 20 years bond yield has jumped to 2.75%, a level last seen in 1999. So everyone who borrowed at 0% suddenly can't make profit, starts losing money and rushes to sell especially US assets, triggering the global panic. Japan's government holds $10 trillion in debt, which is about 3.2 trillion invested in worldwide. Out of that, 1.2 trillion is in US treasuries. If the rate climbs further, Japan may be forced to sell that. And since US treasuries are more liquid, they will be dumped first, pushing US interest rate much higher. And this keeps adding more stress to the economy. And at the same time, another 1.2 trillion was borrowed by institutional investors, which is invested in equities and cryptos. Rising rates means these positions will start unwinding, increasing the pressure to sell. And if the yen strengthens even 2%, borrowing cost rises another 2%, making things more worse. This is why markets are extremely nervous right now. A detailed explanation is in the first comment. And before you leave, hit that subscribe button.